Welcome back to Indianomics. I've been speaking with a very special guest, Martin Wolf, Chief Economics Commentator at the Financial Times, brought to us thanks to NCAER. Thank you very much, Mr. Wolf, for your patience. Well, de-dollarization, you raised that issue. Will it really happen? I mean, is there an option? Is there an alternative?
I don't think de-dollarization per se is possible. I think two things are going. First of all, I think we've reached satiation, and this is
in terms of U.S. bonds.
In U.S. that people don't want to hold these colossal foreign currency reserves. It is important to remember that foreign currency reserves are very high now. People had terrible shock in the Asian financial crisis, global financial crisis. They decided we need the insurance of dollar reserves and more broadly currency reserves. They went into a whole slew of currency reserves, mostly with the US and European and US allies. Remember, the other main issuers of reserves are US allies, particularly the euro, but also sterling, yen, and so forth. Now, people bought these, and they seem to feel we've got enough of that, and I think that's perfectly reasonable. They have been made aware there are risks, particularly with the US. There are sanctions. Look at what's happened to Russian reserves. They know that if they rely on US dollar assets, it means they also rely on US financial markets, which the Americans can close. So these aren't riskless. You want reserves to be riskless. So the reserves themselves will be less important, but the dollar will remain the dominant one unless they go completely crazy. But in the longer term, there are other aspects, which is what currencies you use for transactions. And there I think the dollar is overwhelmingly dominant in transactions. But it is possible people will start wanting to diversify and do more of their transactions in other currencies because they might feel that the sanctions are less likely to bite. I think it's inconceivable to my mind that cryptocurrencies will replace any of the major currencies because they're not really usable. And stable coins, which people are talking about, are basically just repackaging of fiat currency. So that doesn't really change anything very much. So the idea that there are some very complex and subtle things going on, but for the foreseeable future, the dominant currencies in the world will be those of the US and its allies. And it's very difficult for me to see anything that will change that. But people will stop increasing their holdings because they do look risky. They will try and economize on reserves, and the world will become simply messier.
Okay. Well, now let me come to China. Because this is an under-discussed problem, the Chinese have raised the threat of rare earth magnets and said that they will not, they're holding the world to ransom. Yeah. They can do that with other things, and I understand lately they're doing it with some specialized chemical fertilizers as well. They could increase this. Is this an underappreciated threat that can disrupt economic growth and trade?
Well, it's obviously a salient way of engaging in a trade war. And what they've said to the Americans is we have weapons too. Of course, it's a double-edged weapon because it tells people we can't rely on China. I understand that it is possible, perfectly possible, I'm not an expert, to do the rare earth excavation. They exist elsewhere. It's a huge investment. But if the Chinese make themselves sufficiently unreliable, the rest of the world will invest it and make their own investments in these lots of deposits, as I understand, in Africa and other major countries. So it's quite risky for China to do this, but it will reinforce the idea, which is, I think, going to be very important in the trade issue, more broadly, to discuss that we have to guarantee our security. And that implies that we can make the things that are vital for our security and we can get the raw materials. So the Chinese have a real danger here, threat to them, if they pursue this tactic. And what's going to happen, I think, in future is they won't push this to the limit. They will be careful. because they really don't want to be at a trade war with everybody. But everybody is going to pay a price to get greater self-sufficiency in those products and processes that they come to think are vital to their economic and military security. The crucial point here, the big point is, there is a breakdown of confidence among the major, and trust in the major players among themselves, particularly between the US and the Europeans, and far more the Chinese, and that's not going away. By the way, that is another opportunity for India.
Yes. Okay, I'll come to that in just a minute. The Middle Eastern part, one of the things that stood out among all the the skirmishes, the conflicts and the bombing, is that crude price didn't rise so much. It was $78 for a day. Otherwise, it's gone below 70. Is the world a little more Middle East crude proof?
I think the answer is no and yes. If there were, this is the guess. I mean, in terms of crude oil reserves, the Middle East remains the dominant place. My understanding is about 40%. So it's a colossal reserves. Secondly, about 30% of world oil, transport oil, goes through the Straits of Hormuz. Now, if there was a war which started blowing up the oil fields, and if you remember the Kuwait war back in the early 90s, they did blow them up, and it was quite disruptive, and that's one of the reasons there was this huge
surge in crude prices,
and the huge
$86.
Battle to get them out of Kuwait, the war. If that happened, then of course the oil price would go through the roof. And though oil is not as important to the world economy as it was in the 70s, oil intensity is roughly halved, it's still very important. So the world is not crude oil proof. Not Middle Eastern crude oil. It's too important, and if it were really disrupted, it would be a big problem.
India has become the fourth largest economy and will hopefully become third very soon. And there is this conflict between US and China giving India a little more elbow room. How do you see India's place in what you call the new world disorder?
Well, my view is, I've thought ever since I first worked on India back in the 1970s when I worked for the World Bank as senior economist in the India division, 80% of what happens to India, because it's so big, and depends on what Indians do. So if you make the right policy decisions, make the economy work better, use your human resources better, India should thrive. Unless something unbelievably horrific happens, global thermonuclear war, or you get involved in a major nuclear war with a country I won't mention. Leave that aside. So it's important to remember the outside world is not decisive. But there's also no question, if you look at India's experience, particularly since the reforms of the early 90s, that opening yourself to the world, opening yourselves up to FDI, becoming a major export hub, beginning to industrialize, all these are going to be very, very important. And I do think that relative to most other countries, because of your scale and the fact that you're significant, you are likely to have good opportunities. And the particular point is, I don't think China will really want to alienate you, so I think there's a relationship. But crucially, the West as a whole views India as a friendly country. There are now very strong cultural links because there are lots of Indians everywhere, and that very much includes the Americans. Mr. Trump and Mr. Modi get on, which is probably not insignificant in this regard. And so it seems to me that India can probably thrive reasonably well in this much more difficult world because it's going to be favored over others, and it has opportunities that are bigger than others, and it does have a domestic market again which will help it. So I think that the world shouldn't be a problem for it. India has a bit of an opportunity here to be a leader in the sense it's not a part of the Western Bloc. It's obviously not part of the Chinese bloc. It's very, very respected by the countries of the South. it, I think, could, for instance, say, and it's one of my particular proposal, okay, we will have deals with the US, but any deal we offer the US, we'll offer to everybody. We are going to continue with non-discrimination. We are a friendly country. We're not going to privilege the US over Europe or over Africa or anywhere else. We are a friendly country open to the world. And I think India, that's a suitable role for India. I think it would be a credible role. I think it would have influence on the world. And I think it would also be good for India. I still think growth can be 8%. But there's one final comment, which is important. The world economy is now growing at 2 to 3%. India wants to grow at 6, 7, 8%. In other words, much faster than the world economy. You don't want your trade to shrink relative to your GDP. The evidence is that tends to be bad for growth. That means your exports have to grow 7, 8% a year when the world market is growing at 3%. That means you need to become ever more competitive, ever more diversified, and you are going to face protectionism. It's inevitable. And that's something which I will really emphasize. If you don't make that happen, it will be difficult to sustain the growth you want. And I think growth could well slow to 4 or 5%, which is very clearly not what the Indian people or the Indian government wants. So that has to be understood. There is no future, I think, in which India becomes a developed country if it becomes ever more closed. That's the experience of Indian past. And I think it's the Indian, going to be the lessons for the future. So don't be complacent. The challenge of growing much faster than the world when you're a country as big as this is quite a considerable challenge, as the Chinese have been discovering.
Most useful advice. Don't be closed and be competitive. Thank you very much, Martin Wolf, for this very special conversation.
Great pleasure.
That's it on Economics. Thanks for watching.